So the COT report stands for the Commitment of Traders. It's one of the most sought after reports that a lot of traders want to understand. And I want to make sure that you understand it. If you haven't watched our previous COT report video, it went really well. A lot of people loved it. About 15,000 views, a whole bunch of comments and likes. I want you guys to see it. I will link it right here when you're done with this video. And also, I want you guys to make note that we will be coming up with a COT course very soon with details and graphics and everything, how to actually design a strategy around it based off of numbers. If you're unfamiliar with COT, the COT report is when the big banks, the institutions, the hedge funds, they actually are telling us as retail traders when and where to buy and sell, because they're the one who actually move the markets. You know those candles that move up and down? They're the one actually moving it. So when they're buying a whole bunch of yen or when they're selling a whole bunch of yen, that's when we should be buying or selling. When they're buying a whole bunch of Great Britain pound, that's when we should be buying, because we are the ones who are actually following on their coattails when they're moving that market. So I'm going to show you a site where you can actually find it very briefly, and then I'm going to show you another site that makes it a lot cleaner, and then how you can actually use to this site to define your strategy, when to enter, when to exit. And we're going to look at the live market, proving to you that this thing works. Now, again, I want you to back test this. Do it on your own, but I've been studying the COT report for a couple of years now. I've been using it with my own strategy, over 90% win rate, and I'm actually developing a strategy based upon it as we speak. So that being said, guys, I want you guys to pay attention, save this to your YouTube playlist. And if you haven't subscribed to our stock Discord group, because now we're starting to focus on stocks, ETFs, and indices in another academy, I want you guys to join our free Discord group. Link is in the description below. In the meantime, guys, you're in for a treat. Make sure you have a pencil, some paper, your computer, your laptop. Back test this with me. I will guarantee you will love it.
Yeah, I know I got problems, and I don't know where to go. I don't want to put the blame on you.
All right, guys, so I'm going to go over this really quickly here. This is the CFTC government site. It stands for Commodities Futures Trading Commission. Again, guys, if you haven't seen my previous video, I'm going to put a picture of it right here. It's going to be in the description below, and also I'll leave it at the tag at the end of this video as well to remind you. The CFTC is a government site, and what they do is collect the amount of longs and shorts that these big banks, these big institutions and hedge funds collect. When the big banks and institutions are saying, hey, I'm buying 150,000 contracts on the Great Britain pound this week, they send it to this site right here. The site then releases it to us on Friday. So just to put in perspective, the big banks put in their numbers to this government US site every Tuesday, and then every Friday, that same week, the government gives it to us so that we know what these big banks and institutions are trading, because we want to trade exactly the way they trade because they're the ones moving the market. So it's kind of like insider trading in a way, if you know how to use it. But I'm going to go over this really briefly. Again, if you want it in detail, look at that other video. And again, in the future, we'll be creating a course simply on this. And I'm hoping to have this released sometime this spring. So if you don't want to miss out on it, subscribe to our YouTube channel right now. Turn on that notification so that you can get every single video that we upload so that you're aware when we put this out. Also join our Telegram in the description below because we'll announce it on there as well. Again, cftc.gov. We're going to go to Market Data and Analysis right here in the middle of the page. Click on Commitment of Traders. This is exactly what we want. We want to scroll down to where it says Current Legacy Reports. The second column that says Chicago Mercantile Exchange, and then right to the right of it, we're going to click Short Format. This is where all of the big banks and the institutions turn in their numbers, and the government makes it into this little file here. Now, there's a lot of things you can trade. You'll see non-fat dairy milk. You'll see CME milk. These are futures you can actually trade. Lean hogs. A lot of banks and institutions, they trade these here. Lumber right here. There's a lot of things, but we want to skip over that. We're only interested in currency. So let's go ahead and just pick a currency. Let's go AUD. I'm going to hit Command F for find, or if you're on a PC, you want to hit Control and F, and then type in GBP, hit Enter, and then it will pull it up here. So GBP, Great Britain pound, this whole section is what we want to look at here. Now we're only paying attention to the non-commercial side, not the commercial. I'm not going to tell you why, because it's in the last video. I highly suggest you watch it if you haven't already, but we're only focused on the non-commercial, and this is what the big banks look at as well. We're looking at long and we're looking at short. This week, as of April 16, 2024, that was last week. Remember, they submitted to us on Friday, provided Friday. And then we get a chance to look at it from Friday on out. They have put in 71,800 longs for the Great Britain pound. They have put in 63,181 shorts for the Great Britain pound. So they're buying Great Britain pound and they're also buying shorts for the Great Britain pound. Now, which number is the biggest? They have more longs than shorts. So if they have more longs than shorts, we typically will want to buy, right? Now, this is only one currency. We typically trade currency pairs. But I want to show you on a chart here, if I were to go to the Great Britain pound index, which is right here, BXY, this is the Great Britain pound index. I'm going to go back to the commitment of traders report here. They have 71,800 long, so I want to buy, right? Let's go here. That was as of this past week. So what I want to do typically on Monday is want to buy with them because they're the ones moving the market. So if I get my tool here, this candle right here aligns up with Monday. Scroll down, you'll see it says Monday, 22nd, April 2024. And it starts to climb. This is just the index. I'm not looking at a currency pair, but it's rising exactly what it said it was supposed to do, according to this. And it's been rising for 3 days straight. 1, 2, 3, even 4. Because they have more longs than shorts, I would have want to bought the Great Britain pound index. Now, we don't just trade the index, we trade a currency pair. So this is where it gets a little tricky. Instead of looking at the CFTC.gov site, I'm going to look at this site here, this barchart.com. I don't want to look at this. It's a little bit too jumbled up. Barchart.com makes it a lot cleaner. So again, if you don't know how to get here to this certain location, I urge you to look at that other video. Again, I'll link it at the end of this video and also in the description below. So if I go to Great Britain pound right here, it gives me the same information except everything is color coded. It looks neat and nice. Look, their long position, 71,800. If I go back, 71,800. Short positions they had right here, 63,181. The same thing here, 63,181. And when you subtract those two numbers, they have more longs than shorts, and that difference is 8,619. This is the number that I typically want to pay attention to if I am swing trading. This is the number I want to look at if I am intraday trading. I don't want to explain too much in this video. This is just a short video, but we'll have a course that's going to go in detail with a whole bunch of visual aid to make this a lot simple. We can see that this number is red. It is a negative number. They have an overall negative 19,633 short positions. I know that because it's red and it has a negative number. I want to go short overall. However, I need to pair it with another currency. So let's go ahead and look at, let's say odd CAD, for example. So odd CAD is right here. I drew this out for you guys. So odd CAD is the first currency on the left. CAD is the second currency. That's why I put 1 and 2. Let's look at odd, for example, back on this report. So the Australian dollar has negative 874 contracts. That means the big banks and the institution has more short contracts, meaning selling, than they do long contracts. So I want to keep that in mind. I'm just going to put that on my chart as a negative 8K. That's what I did here. That means price should be dropping. However, we don't just trade one currency. We trade two currencies at a time. So now I have to look at CAD. CAD is the second currency. Let's look at CAD. And CAD right here has a negative 29,430. Let's go back to the chart. I'm just going to put negative 29K. So I'm just going to put negative 29K. Let's just put a minus sign here so that you guys are aware. Same here, minus 8K. Now I have an arrow pointing up, and you're probably saying, well, why do you have an arrow pointing up if it's negative? Well, that's because it's the second currency. If I were to flip this around, this up arrow will be headed down because the Australian dollar is the first currency of this pair. When there's a short, odd means headed down. The second currency, when there's a short, it means headed up, but it's also saying that the Canadian dollar is weak. Now, whenever you see two red currencies like this here, when you're battling two red currencies, I want you to think of a tug of war. They're battling for red, all right? The Canadian dollar has negative 29,000. The Australian dollar has negative 8,000. So they're battling, pulling the rope towards one another. However, the 29,000 is the biggest number. So that means that price should be headed to the upside. So that means the Canadian dollar is a lot weaker than the Australian dollar. So we should reflect that on our chart. If we go back to our chart here, so on Friday, when this report came out, April 16th is when they released it to the government. And then on that Friday is when we received it just a few days later. This is what we received. And this is the numbers that we're going to be following when we're trading. And when we look at it on Monday, this is when we typically want to enter the market. And you can see right from Monday, we started to climb. Now, this is better than any other indicator, whether if it's RSI, whether if it is the Bollinger Band, the MACD, the 50-period moving average, any type of moving average, because this is saying what the banks are putting in. This number does not lie. Now, if they submit falsely to the US government, that's on them, but I highly doubt it. So this is the number that you should be watching. Now, as far as the USD, I don't like to use the USD for the commitment of traders when I'm trading because this is the index of the United States dollar. The index itself consists of multiple currencies. So that's neither here nor there, but we're going to only pay attention to these here. Now, the best way to trade this is when you find a red number for the net change and line it up with a green number. That means that price should be moving the same. Now, remember when we had two negative numbers here, they're moving opposite of one another, but the biggest number, it will go that way. In this case, it went up, and price did that exact same thing and shot up, just like this here with the minus 29K. So now we're going to look at odd JPY. Again, we're going to look at two negative numbers here, except this time we're going to look at the net positions, and this here holds the trend, okay? So JPY, remember, has a negative 165,000, which is huge. And then the Australian dollar also has a negative, but it's 101,083. So let's go ahead and pull up the chart here. We're going to split it here. So remember, odd is negative. So they have over 101,000 short contracts for odd, the big banks. So I'm just going to put one here and I'm pointing it down because it's short, negative here, right? And then JPY right here has a negative 165,000 contracts. So I just put 165K headed up. Remember, up means short contracts for the second currency. Now, they're playing tug of war again. Remember tug of war when you have two of the same colors, whether if it's two greens or two reds, they're playing tug of war and you have to go with the one that is higher. That's completely different if you had a red versus a green, but I go a little bit in that first video, and then in the future course, we'll go into it with more details and graphics. All right, so which one would you go with? The JPY, which has 165K, or the AUD, which have 101K. It should be this one. This is the greater number. They have more short contracts with the yen, so we want to be buying. Now, again, this here was as of April 16th when it came out. We got it on Friday, which is April 19th. So that means on the 22nd, I believe that was a Monday, we would want to buy. So let's go ahead and take a look at this here. Now, this is how you use this with price action. You need to understand your support and resistance zones. You need to understand how to draw your trend lines on the higher time frame. This gives you the trend. With all of that combined, gives you a perfect setup when you are trading with your strategy here, especially if you're using price action trading. So this red candle here was on Friday. That's when the report came out, and it shot to the downside and it wicked, then pulled back up, closed on Friday. Monday is where this white candle is. Now, if I was trading according to only the COT report, I want to buy because the yen is more weak, headed to the upside right here, and you would want to buy. Now, typically you don't want to just buy. You want to be able to draw your support and resistance zones and then execute once it gets to there. So I'm thinking long for odd JPY. Now, whether if you waited to see if price will come back and retest or not, this is the long-term trend. Remember, when you're looking at the net positions, all of this is long-term. So if I see a net minus 165,000, not just 992, I'm looking at hundreds of thousands, 165,000 shorts, hence that negative sign here. I'm thinking of long. So you may or may not want to wait to see if price will pull back to the trend line or not. But look at this here. Day one, a strong push to the upside. Day two, day three, and day four, and shot out straight above our resistance zone. If I measure that momentum from Monday to this current day, that is 228 pips. If you were a swing trader, you would have racked up, not because of what a Bollinger Band has told you, because look, the Bollinger Band didn't even really get close to the support zone. If I turn on my RSI is not even at the 30 level. It's nowhere near the 30 level. It's at the 50 level. So if you paid attention only to indicators, you would have missed out on over 200 pips. So guys, this is just kind of a snippet of how you want to trade the COT report, especially coupling it with price action, understanding your trends, understanding where your support and resistance zones. If you mark your support and resistance zones incorrectly, if you don't understand how to find trends, if you're finding trends on the 1 hour and 30-minute time frame, that's not the true trend. You have to have a great foundation before you do anything. That being said, guys, we have a Forex Academy course where we hold you by the hand. Literally, we're available with our Academy 24/7, always asking questions, always answering questions, always there inside of our Discord private community. And we provide you with modules so that you can learn, come up with a strategy. We provide you with a journal once you get to a certain stage in the Academy, and we also graduate you if that's what you want to do. We highly encourage our students to go through the modules and learn, because this is what separates consistently profitable traders from the rest of the world. Guys, I have to wrap it up. And remember, look out for the course that we're going to have. It's going to be in detail, very easy. It should come out sometime at the end of spring, early summer. That's what I'm anticipating, but you have to join our Telegram in order to get the notification. Again, if you're interested in stocks, ETFs, or indices, we're starting a stock, ETFs, and indices academy, free Discord in the link in the description below. And also our Telegram link is in the description below. In the meantime, guys, I hope this is a next step to help you becoming consistently profitable. I will see you in the next video. God bless you.